medium-term moving average is that blue line that you see on the screen. The black line is the actual moving average. When there are crossover situations or relationship to those two lines to each other, it can give you some clues about the direction of the market and where your position should be. And we'll talk about that in a little bit more detail also. Now we're going to add to that a couple of other indicators. The first one we're going to add is the Neuro Index. The second one is the predicted differences. The Neuro Index is the gray line that you see on the bottom part of your screen that goes across, and as you can see, it's pretty straightforward. It's either a 1 or it's a 0, and when it's at a 1 or a 0, that tells you what the price is expected to be in 2 days. This is a good short-term indicator of what's going on, and it also will help you determine how to get in right, how to get out right. During the trend itself, you're looking at some of the other indicators, and so it's not going to be as useful perhaps for a person in the middle of a trend, but it's going to be very useful for a person trying to initiate some kind of a position. Now, when we look at what we see on the screen here with the various indicators that we've pointed out with Vantage Point, we need to point out a couple of things in a little bit more detail. The first one that we want to point out is, again, that predicted moving average, that blue line that we talked about, and the trend of that line that moves up in this particular case. We're going to talk about that first to kind of explain how we got there and why we're moving up, why we're looking for a long-term position. The angle of that line when it points up obviously indicates the market is moving up. If it's moving down, the angle is going to be pointed. The potential of a short-term or short position is more likely. One of the keys to the moving average strategy is the crossover. We have several different places here where the blue line, the predicted moving average, moves above the actual moving average. That is a bullish indication that the market is moving up. When the market, after it has crossed there and when the trend is in force, of course, it's easy to see, but you need to get kind of a feel early on, if you possibly can, as to when that trade, may be a profitable. When is that going to start? You have the same type of thing over here at the end. We're going to talk about that in more detail, but where you have the crossover to the downside. Those crossovers are important indicators of the overall trend direction for a particular market. Other aspect we have here, we talked about on the bottom side of the screen. We talked about the Neuro Index, where we have the reading in this particular case here, where you can see where this crossover occurs, is at 1.0. That means the typical price is expected to be higher in 2 days than it is today. Now, the Neuro Index is comparing a predicted moving average and an actual moving average for 3 days, and it forecasts 2 days ahead. The other indicator that we have on the screen is the blue and green line that you see at the bottom. The blue and the green line are the predicted differences between moving averages, between a predicted moving average and an actual moving average. The blue line that you see, this blue line is a medium-term moving average comparison. The green line is a longer-term moving average comparison. So you have those two lines that are reflecting what is going on, kind of the underlying action in the market, determining some of the momentum that is occurring in the market and whether there's strength and whether there's weakness. Then you'll also have these situations here where you'll see there are crossovers where the medium term drops below the long term. That indicates that there's some weakness in the market. The strength is is waning. It's going down. And then you have a situation over here where you have the crossover to the upside. You'll note that that occurs several days before the actual market does turn up. So it provides an early alert to what is going on. The other important aspect of what you're looking at is that is the trend, especially as the trend gets underway, is that you have the angle of the predicted difference line moving generally in line with the predicted moving average. Then when it is above zero, this is the zero line that you see right here, above zero indicates a strengthening situation, below zero indicates a weakening type of situation. So all of these different indicators that come together, you're going to kind of be looking at them as a package to get a feel of what is going on from an indicator standpoint. As you can see currently, the neural index is at 0. The predicted differences are pointed down. That's going to suggest something when we look at the strategy that we're going to be talking about. That will be some pretty good clues as to the direction that we're going to take. One other thing that we should also mention in terms of a connection with the indicators is that I like to use some of the things from typical traditional analysis and features on a candlestick chart that to me is worth paying attention to is the doji candle. The doji candle frequently is a kind of an alert, a signal to what is going on as far as when the market extends a trend and then it opens at a price, moves up, moves down, and then closes at about the same price, which indicates that traders are a little uncertain. What are we going to do with this move? It's when it comes after an extended trend, either on an uptrend or a downtrend, but more reliably in an uptrend, that the move is about to end perhaps because the traders aren't certain about pushing it any further. But the key, again, not only is the location of that doji, but then what happens on the candle or two after that doji, because a doji occurs several different times during the chart. You can see a number of places where that might have occurred. You can say right there, well, that could be, any number of these places could be. Doji is not really a doji, but the next candle in this case right here negated the effect of that doji. So the doji candle has to be taken in context of what is going on with the trend in the marketplace. Now we're going to add another indicator here because there's another indicator that can be very useful for traders, and that is what is called the predicted high and low indicator. The predicted high and low for the for the market is a great way to see what the range is going to be for the next day. And it's going to add a couple more lines on our chart, and hopefully you'll be able to track this, but we want to kind of use those as our indicator where to get in and where to get out of the market. Just looking, they give us a good idea on the direction and a good, kind of an overall sentiment of what's going on and where. But we need some precise points at which we would like with the green line or that fuchsia line, if you will, running across the bottom part